Well, good morning, everybody. This is Andrew Horowitz from TriggerCharts, and so glad that you had the opportunity to join us today and spend some time talking about trading, talking about markets, talking about what's going on and how to make some great moves with some of the indicators that we're looking at today and always. Every Friday here at 9 a.m., we're in the studio, call it the workbench because kind of a workbench behind us. And basically what we're going to talk about is the whole idea of how to find those great winning trades, those opportunities to find some really substantial breakouts, breakdowns, where it's consolidating, what's happening. And we're going to take a look at markets as well. We'll talk about economics and look at what's happening in the world of finance, basically just kind of cover all areas. Just make sure that everybody can hear me fine. And we're going to kind of get this sharing here going in a moment. And we'll share this screen so you can see what's going on. And let's see here. Let me just make sure I have everything loaded properly so we can talk well. I see that we have some questions here. Yep, we'll talk about that in a second. All right. So if you have any questions, you can put in the questions. You can put in the chat. You can put your particular stocks inside of the area that you want us to look at. We'll definitely get to that. I'm going to spend a little bit more time with that today. We've had some things we've talked about over the last few weeks that, well, we couldn't get to it. So we'll talk about it. First, we're going to cover some important disclosures. And of course, you need to understand that investing involves a substantial amount of risk, whether it's futures or stocks or options or Forex. Basically, this discussion that we're having here this morning is for educational purposes only. It's important to remember that. Use it as a tool, use it as a guide. Don't take anything that we're talking about in terms of the discussion as a recommendation to buy or sell any security of any type, because there is risk. There is our discussion right there. Click back, everybody. You can see my screen okay. You can see my video okay. And let me know that you can hear us okay as well. Okay, great. All right, so let's close this up. Let's get down to talking about some things that are happening here. Well, we have some mixed global economics, no question about that. Basically, one of the things that we've been seeing over the last several months is the implications and impact of what's happening from tariffs. And the whole tariff situation has really not hurt us too terribly badly here in the US, but around the world, in particular in Asia, we're seeing a lot of headwinds and a lot of problems caused by these tariffs. We saw that China's GDP was the lowest in ever. We saw that Singapore was actually negative 7%. We're seeing that South Korea has to add stimulus. There's problems there. The manufacturing numbers in Japan are just god awful. Europe is falling apart. The banking system is falling apart. But somehow here, we're an island of just about new highs, getting really close. The Fed speakers have been coming out all week. We call it the parade. And the parade of speakers have been coming out this week trying to prod the markets, trying to give back some idea that, yeah, there's going to be a rate cut in July. The question is how much. Yesterday's speakers gave the idea that it's quite possible there'll be upwards of a 50 basis point cut at the end of July. That turned markets from red to green midday as these conversations were going on. So there's a lot of interesting things that are happening, but basically the markets are really feeding on the idea that, hey, it's not so bad here. Earnings are not so terrible. In fact, some earnings are looking pretty good. We saw that with Microsoft today. And at the same time, they're going to stimulate the economy utilizing lower interest rates and possibly other tools. There was discussion today about the potential for the ECB in Europe to start buying stocks. This is something that has been done in Japan over the last number of years, where the Bank of Japan, the BOJ, has been actually buying stocks, particularly in the area of ETFs, real estate, and stocks on the open market to keep their market up. So it looks like they'll stop at nothing. Anything's possible. So when we talk about the things that are happening right now, we saw that this week the employment numbers continue to look good in terms of initial claims. We saw a little bit of a drag on certain areas of manufacturing, but the Philly Fed came out pretty sharp yesterday, up to 21 on the positive side from an expectation of a +8. So manufacturing is coming back into certain areas. However, at the same time, there's some question about the factory orders, capacity utilization, and durable goods. We're going to see that all next week. New homes also have been having some problems. Vavian, which reported some things yesterday about delisting, was down about 18% on the day. HOV is the symbol there. We're going to see Q2 GDP as well. Questions swirling around. How good or bad is this going to be? Are we going to see a 3 print or probably closer to maybe a 2.2? Now, that's still not so bad. This large economy that we have, the largest in the world, slogging along at 2%, not the worst thing in the world. All right, what else do we got? Theme for the week. The data doesn't matter. That's definitely the theme for this week. The bottom line is that no matter what we're seeing in terms of earnings or economics and around the world, it's being offset by the promise of the Fed to lower rates and to add stimulus. So it's kind of interesting. One of the things I find fascinating is every time the Fed talks and brings up the subject of potentially being looser with their monetary policy, adding stimulus, reaffirming what they're potentially going to be doing, markets seem to think it's brand new news. They think it's, wow, let's move things up. And that's what we've been seeing lately. Even though we have baked into the cake 100% probability that there'll be a rate cut at the July meeting in about 2 weeks, the idea that, well, a 25 basis point cut is about a 75% chance, a 50 basis cut was 25%. It went up to 50% chance of a 50 basis point cut yesterday. You have to think to yourself, what's going on? I mean, we got a good economy, or at least decent. Yeah, there's things around the world that are problematic. Manufacturing's a little bit slow. Employment's good. Earnings seem to be holding up okay. A lot of that is due to the fact that we still have continued residual effect of the tax cuts. So that's been pretty helpful. But why are we reducing rates? Is this insurance cut they're talking about? Anyway, it doesn't matter because what it's doing is impacting markets pretty significantly. So we're going to be talking about Bank of America, Jpmorgan, Goldman Sachs today, Honvavian, Netflix, of course, which didn't do so well yesterday. We're going to talk about Skechers, which came out last night as well. Talking about gold. We're talking about the gold miners. We're going to talk about Zoom Media, some of the things that are going on there. Interesting little turnaround after some of the news about how it impacts Apple computers and Macs. Any of you that have Macs, make sure to update your Zoom video. We're using Zoom today. Make sure you update your Zoom installer, if you will. Update the latest version because there was some deficiencies and potential for holes in the system. We're also going to talk about silver. To the right side of the chart here, take a look at this. Let me bring this back up, my annotation screen, so we can take a look and we can see what's happening in terms of this. So when we look at silver, we saw this major breakout. Look at this beautiful run on the upside. Same thing pretty much happened with gold, but silver's really been running. Down in June was down at 1360. This is the SLV ETF, said in a staccato manner. The SLV ETF here was at 1360, now 15, a pretty nice run on silver. And we saw that breakout right above that 1454 line and just take off because when we look to the left, there really was no substantial amount of resistance that was going on that we drew in by the altimeter. By the way, I'm just going to mention it because it's important to mention. The trading app store over at TradeStation, you get any of the indicators I'm going to be showing you today. There's a 10-day free trial on all of them. I really encourage you to check these out if you have TradeStation. We're using TradeStation version 10 today, but it can be used on 9.5 as well. Anybody that does, in fact, sign up for a paid subscription to any of the Commander series or to the Commander series, $149 a month is one trade, half of a trade. You should be able to make that money back. You'll get a 4-hour online coaching session that is available for you to view anytime that you want at your own leisure. So you can check that out as well. So here we are in a situation I want to answer the question that we have. Tyler sent in a question, and you can send in yours as well. He says, you've been talking about the downfall of buybacks a lot recently. Is this because debt companies are taking on to buy them back? Oh, yeah. Oh, these debt. Yeah. So here's the story here. I've been talking about buybacks because if you think about it for a second, what we've seen in markets recently has been that there's been an outflow substantially over the last few weeks from equity funds, 28 billion or so last week, 20 billion or so the week before, inflows into money market mutual funds or money markets overall. Both ETFs and mutual fund equities in the domestic space have seen major outflows. Yet at the same time, here's the kicker. At the same time, what you're seeing is that there's an increase in the markets, almost to new highs, a continual bid that's happening. How is that happening? Where's the money coming from? Well, a lot of it's coming from buybacks. Companies have been really pushing their buybacks substantially. Debt is very cheap these days. So yes, companies are issuing debt in order to get as much money they can in to then return it back to shareholders. Of course, they have really good earnings and they have a lot of free cash flow due to the fact that we have this tax initiative that went on recently. And that is all giving us a substantial amount of opportunity, or companies an opportunity to simply just buy back the shares and increase their dividends. So yes, debt loads are increasing substantially. So when you look at the overall market environment, that slow chug higher that you see throughout the day, particularly in those names that have big buyback programs, that's an indication, the footprint, if you will, that we're seeing that there is a substantial amount of buybacks going on. Good question, Tyler. All right, let's get into this. Let's take a look. Here we go. So I thought we'd start with gold, GLD, the symbol for the gold ETF. And gold on the 30-minute chart on the left, you can see is doing pretty well. We got a lot of green going on here. If you look across, simply look across on this, what we're seeing is from the 30-minute all the way to the weekly, our signals are all long, 6 weeks long on gold. So this has been a really nice trade. And of course, this goes along with silver, just hitting a long alert right now. Silver's right below it. So whether you trade gold in terms of the ETF, you trade gold in the futures themselves, or whether you utilize a proxy like GDX or even a levered long like Nugget, pretty substantial move. I mean, if you look at GDX, let's type that in there and take a quick look at what's going on. A very similar run out. I mean, you saw it from 21 back in the beginning of June up to 28 now. I mean, that's a 7-point move. That's a substantial move in this stock over that period of time. You look at Nugget, this is pretty frightening to look at. You went from, where did we go from? $16 on the first break when we look at this, and you see where the break happened right about here at the bottom here. I'm not sure why this isn't showing up, but nonetheless, on the daily, we went from about $16 on the initial break all the way up to 36. I mean, it's a double. That's a double. And pretty impressive moves overall. So we're seeing the same thing with silver, like I said. Silver, look at this 30-minute chart. There was many opportunities. If you look at this chart here, there are many opportunities to get long. And simply, I'm going to enlarge this because I want to show you something here. One of the things that you have, and when we look at this and how easy this is to look at, I'm just going to put some check marks here and take a look at a few things. You had some of these breakouts, these yellows. Yellows indicate an alert, kind of a smack in the face. Very simple. I want to color it. I tell you this all the time. And I color it because I want it to be easy for me when I trade. Doing a lot of things during the day, look at a lot of stocks, look at a lot of different investment ideas, allocations, portfolios. And I want to make sure, you know what? I can see things clearly. So we built this to run money, obviously, and we built this to trade. Essentially, what we want to find is when these yellow smack in the faces, long alerts or short alerts hit, when they confirm with the next bar, and then you got these kind of runs. Then the orange is simply, hey, get out. That's what it is. Simply get out. Then we get a turn right here once again, and we moved into the area of short, got a short call. Got a consolidation. Gray is nothing. So yellow is smack in the face, long alert. Green is a confirmed buy. Red is a confirmed short. Orange is out. And gray is no trade, consolidation. But then look what happened here. We got another break. Got a little bit of a run there. This is just on silver on a 30-minute chart. This is back from just a few days ago, right? And then you have all these nice little runs, a break, consolidation break. You got out here. You got a, let's see, we got a short here, close the short real quick. That was not a good trade out, obviously, because the short came in and closed a bit higher, about 25 cents. But all these nice trades, and you finally went long right here, about 14.80, and then it kind of came in for 15.16. So scalp trading, this is great. This is great for scalp trading. So that's on the 30-minute chart. You can use this on any particular chart that you want. If you want to look at this, let's see here. Let's move this up. Right about there so we can see the dates. If you want to kind of zoom in a little bit and you want to look at the intervals, and let's say, I don't know, you want to use a 10-minute interval, chart runs just as well. So the charts run on any interval. I mean, some people like to use even shorter intervals. I don't know why. I don't really understand the whole point. There's a 5-minute interval. So you got this nice breakout over here. Then you got this move on the upside, another breakout. I prefer to use 30 and 60-minute charts. That's me. They give me a much longer swing opportunity. You can see the breakout that happened. I mean, a beautiful breakout that happened right about here, right? Look at that breakout. And then what do you get? You got this major move to the upside. So this major move to the upside really gave you the opportunity to gather what, from 1436 now to 1530. That's a buck. It's like 8% return overall on silver. So if you're not watching the miners, you're not watching the precious metals, I think you're doing yourself a disservice. We'll see where they go from here, but a lot of this is to do the financial situation with monetary debasement, which is because of the lower interest rates, the dollar coming in a little bit. But the one major thing that you need to understand and what you need to look at is this. There really hasn't been any substantial amount of breakdown of the US dollar. And what's happening here is that you're still seeing this go up. You look at the returns of these currencies in different, in return of these materials, gold, silver, in different currencies, it's even more impressive. But here's on that daily. So you could use both of these. You can use the radar screen above to tell you what's going on. Some people have asked about Boeing. And Boeing has been in just a daily consolidation. You can just, again, take any kind of drawing tool that you can. And sometimes I like to use shaded. Sometimes I like to use just open box. But you can see that this consolidation between about 340, 379 can't seem to get above that level. I'm actually going to also take, in here, I'm going to take our study, the radar, which is a more granulated and refined look at the market profile, just off to kind of show you how easy these three lines are to look at. You got the red, which is resistance. You got the blue, which is the high volume node, and the green, which is support. Here's something interesting. You know, here in the US, where we look at red as kind of, like short, see right here, or green is long. You know, in China, they use the opposite. Red is good, green is bad. So we kind of use a combination when we're going to be coding these for the Chinese market shortly through TradeStation, through that. And we actually have to change some of these colors around, which is kind of interesting. Yeah, Tyler, micro futures have been great. If you haven't traded them, check out the micro futures that are available over on TradeStation. They're pretty neat. I want to mention this one too, because this is an interesting stock. We don't have a lot of data on this, but what I did want to show you here and kind of stretch this out a little bit. This is the daily on Zoom. You see this is an IPO back on in May. And when you look at this, let me kind of click this up just ever so slightly so we get all the look here. This was an IPO back in May, started out in the, 30-something range, opened up, $60 it closed, jumped up all the way to 105. There was some issues right about here. We got our first altimeter that was drawn. We need enough days to get in there. Right now, you're seeing it's consolidating in this range. If you see a breakout above pretty much 10, we'll call it 101, 102, that is an opportunity, especially when it comes to an IPO, to own this. So a lot of the troubles have seemingly gone. But if you go to offices anywhere right now, I'm hearing a lot of conversation from a lot of people that Zoom is the particular one that they're using. So that's pretty interesting. At this point, just do me a favor. In the chat, I'm going to type here. I'll type it in for you so you know where it is and you can locate it. Type in your symbols and we'll get to those. Some earnings news this week. Bank of America. And I'm going to minimize this. I'm going to minimize that screen. I'm going to take this and make it a lot bigger for us to look at over time. Look at that. Now we're talking. Bank of America. What you can see here is that it's still stuck within a range. And really, you look right here, another range that's stuck. It was stuck here. It tried to move above. It can't. It moves above, finally moves above. I like the stock from a valuation standpoint, from a technical standpoint. They came out with better net interest margin than many of the others. But really, what are we looking at here? One of the main things you want to do is always draw lines. So I want to start drawing lines and see where they connect. You can see that when I start drawing a line from right to left, always going right to left, what I'm seeing here is there's a lot of points that I'm touching in terms of the altimeter. I got all these lines that are converging at the same level. So until you get really above, I would say here, which is about the 30, what is that, 30, about 30 and a half or so. You really don't have a trade that I see as really substantial. You have the opportunity at that point to move above, but you still have some top line resistance over here. So always draw lines. If I can help you with one thing, there's a lot of fancy things that you can do at TradeStation. You got to draw some lines. Bank of America seems to be in a consolidation mode. All right, what do we got here? We got Goldman Sachs. Goldman Sachs a lot better. You see that break. So that same discussion we had a second ago, where we have a level that we want to look at. Kind of didn't draw that too well. I'm going to add a little bit to that box. That was kind of the range break. Now, obviously, right here, there was a breakout. There was a level that was back on the 17th that it looked like it was going to be a buy at about 194. Closed the trade the other day, about 2 days ago, about 214. Good for about a 20-point overall gain. So that's good. That's a nice little run. But really what you want to see is it move next level. The good news is, from what I see, that if you stay over, I'm going to draw another line here, right about here, a little bit lower than that, but about there. And if you can stay above this line right here, you're in good shape in terms of this trade. The problem you have with all these is the Fed is really doing a lot of work and reducing interest rates. That's not good for the banks necessarily. All right, what else we got here? Jpmorgan, still in a consolidation as well. I'm going to take this down because it's starting to annoy me right there. Jpmorgan's in an uptrend, but yet a consolidation. You know, you look at this and just simply don't see anything over the levels really that we saw back in May. So again, just drawing you could use two things, I think, that will really help you: boxes and lines and arrows, three things. So, you know, you draw this consolidation here, kind of looking right about there for that consolidation point. Anything inside of there, I wouldn't really be trading unless you're doing some swing trades in and out. But otherwise, I don't think it's really worthwhile. So just continue to watch these and see if they break out. Microsoft trading up this morning at about, let's see, 140, an all-time high. This is obviously the daily. It's trading way up here right now. Microsoft was a continual opportunity to buy. We're seeing that the momentum has slowed down. This is the aileron. So we see on the top here, with the lines, with the radar that I showed you before, with the coloring of the buy and sell and consolidation signals, and the radar screen up top. We're the only ones that have this available in the trading app store. You can just look up Commander Series or TriggerCharts Trade Station. You'll find it. Go to TriggerCharts.com as well. I'll put that in here. Hopefully I'm spelling this right. You can go there as well and check out all the different videos. Tons of videos there, and there'll be replays of this as well. Microsoft is breaking out here. Microsoft has been just a nice, steady eddy. I mean, it's kind of moved up, it moves back down a little bit, moves down. No real opportunity to short this. Some of the oversold levels that you have when markets start to move down. But generally speaking, we've seen a lot of upside momentum. In other words, above zero for the aileron is a really good situation you want to see. This was a banger. Look up banger trade or banger setup on the trigger charts. Just look that up and you'll find all sorts of videos about the banger trade where you saw these big levels down. It's not perfect, but you saw these big levels that hit on a magenta level right here. No cluster formed, but holding of major support and then launching back up. What else do we have on here? We saw this yesterday. Hovavian drop off a cliff. Just an ugly chart. Nothing here. Nothing to really trade. Thinly traded. $7 is going to be delisted. Skechers has been a decent trade here, been very volatile, but when earnings come out, it seems to have a nice move. Then it gets consolidation. Again, these charts to me don't look fantastic. Not like, wow, I love that one. You know, gold I love, silver I love. These charts, they look okay. Skechers is going to open up, I think, to potentially close to an area that you want to look at, because I'm going to draw a line here. Now, I went way back. You know, we're looking at 2018 here. But, you know, right now, Skechers is trading at, what, 39.20. So we're right about there, which is pretty much that consolidation region that we're seeing back in this range here. It's got to really break above that. But you see, look at these gaps. These are areas that are opportunities to trade, and that's why you're seeing this big move up to about here today. You know, I would expect probably to come back down maybe a little bit to support, maybe at the 38.20. But, you know, look at these weird little squiggles of this up and down, and a mess, which tells me that it's a hard trade. Netflix. Did I get that? Netflix? Yeah, Netflix right there. Netflix, going to go back and zoom in a little bit on Netflix here. You're seeing a little bit of an oversold situation with Netflix that's happening right now. The stock itself, let's kind of bring this up. Where are we? Let's just draw a line and see if anything connects. We're right about here. Let's draw it left. Not many connectors right there. What I would see then is the opportunity for a short, which we did call about 4 days ago at about 375. It's a $50 profit right now on this on the daily chart. I would eventually think that we're going to see it move down right about to probably close to these levels, which coincide with a major If you look at this, we could draw some more lines together, a major support line. So use that as an area to consider moving out right at the $300 level, a nice round number. If we do, in fact, hold levels that are probably right about at about 350, currently trading, excuse me, not 350. If you get back above these levels, maybe 350 is the top end OIC, but really you have a lot of resistance levels that you have to look at right about here. So I think that the top end probably for another short opportunity is about 340, something like that. So let's clear that and let's move on. We got a few more minutes here. We got plenty of time. Chewy came out, IPO, been really not doing too well. You get to listen, how do you play IPOs? You can get above, I would say, right at that top right there, 34.57. Put that as an alert for yourself. I want to show you a great trade here. This is Nucor Steel Company. Yeah, this great opportunity to trade it back on the 22nd of May, all the way from about 60 down to about 48. Pretty substantial move. What are we seeing right now? Well, the stock is trading at about 55.50. Let's find that where we are. And when you know, right about at the top end of its range. Now, if you do break out of there, what happens? Well, let's take a look. If you do break out of there, what you're going to see potentially is the opportunity for this to move up. So let's take a look. This is our line, what we have to look at. What's left of there? Not much. You got some black, which is a hole. So what you'll see is potentially the opportunity to move up into this major level of resistance here, which would be right about at that level, which you can see, because what you do is simply, once I said, if I'm nothing else, I'm going to drill this in your head. Got a lot of lines that are drawn across that meet the criteria of resistance. All right, we got a few more people. Let's see what I got here. Is that Ken, is that an NVIDIA or it's got to be NVIDIA? NVTA? Is NVTA a stock? Maybe. Nope. Nope. NVDA, enter. NVDA, enter. What's happening? I don't know what's going on here. It's not happy, my system. Huh. Let's do this. NVDA, enter. Something's not right. There goes NVIDIA. Yeah, live issues here. It loads pretty fast once it gets going. I don't know. Something's going on with the internet. All right, there we go. NVTA. All right. Oh, yes. There we go. There we are. Sorry about that. Technical difficulties. All right, so what are we seeing here? It looks like it's going to open up a little bit higher today. Yes, you're seeing that there is a potential for a breakout on NVTA. What I'm seeing here from the momentum is looking pretty good. You got some nice green here, overbought situation right now. I would say watch for this to come back into its level of support at about 24.50. You get a break above 25. Let's go to the upper end. 25.50, that looks like it's a good opportunity. You can see some continuation of this and a kind of fill out of all this, then break above. Because really what you're looking at here in terms of your range and what you want to find is right above here, right above, these levels in there is going to be really interesting. But then you could start to break, because this looks like it doesn't have a lot of volume. And when you look left, we kind of just go and look, left over this way, there's not much going on that's really substantially going to block us, at least from these levels. So you can kind of break it back a little bit further on this, but basically, I don't see anything else right here that's a problem. You got a nice little move here from an oversold situation on the bottom that kind of came down, probably an earnings release that happened right here. So there you go. We have SJ, what is that? SJT. I don't know why that's not working. SJT, enter. I can't see anything right here. I mean, this looks like it's a never-ending, drop from $6 down to $3.57. There could be a good dividend here because it's a realty company, but I don't see any reason why I would particularly own this. So we're going to end right here. It's 9:30 on the dot. We'll be here again next Friday. Try to figure out what's going on with this. Let's take a look really quickly what's happening as we close here. We got futures moving up very sharply, nicely. We got the YM The Dow futures up 125 on the open, 11 on the ES, and the NASDAQ's powering higher. A lot of that's probably due to, I would think, Microsoft, moving up to that all-time high, breaking above its range. So thanks for joining me. Make sure to go over to TriggerCharts.com. Make sure to go over to TradeStation, to the Commander Series, the Aileron. We also have the key reversal indicator. Let's take a look at that real quickly. We're in equilibrium at this point. We have all this, plus a couple of freebies there, by the way. 10-day free for anybody that signs up for any of those. Hey, thanks for joining me, and we're going to end it right there. I'll see you again next week.